Welcome to the Small Business Academy at IU Northwest. I'm Jane Azostek. I'm the Director of the Center for Professional Development here at IU Northwest. The School of Business and Economics, along with the Center for Professional Development, has developed a video series to help individuals who are interested in starting their own business. And one of those video series involves how to write a business plan. Of course, a key part of writing your business plan is to present it to lenders for loans. So it's fitting that we have a group of bankers here today who want to give you some information about how to best present your business plan. Let's begin by meeting our panelists.
Thank you. Hello, my name is Talithia Barrett. I am with Horizon Bank. I am the community lender. I've been in real estate and lending for over 20 years.
Hello, my name is Tom Neifer. I'm with Centier Bank. I've been in banking for 40 years and in commercial lending for approximately 30 years.
My name is Dan Madura. I'm with People's Bank, located here in Northwest Indiana. I have 25 years worth of banking experience, 23 of them on the lending platform, commercial lending platform. Thank you.
Well, thank you all for joining me today. I'm looking forward to our conversation. I know that you're going to provide great information to our viewers. So let me ask a question to start us off. In a broad sense, what would you say is the most important thought that a business plan should convey?
Well, in my opinion, I believe it should convey the business purpose, the business goals, financial goals, projection. Those are some of the most important things I would think we need to know.
Yeah, the business plan should be very informative and explain how you as the applicant plan on being able to succeed. It would have financial information, it would have industry information, and how do you feel you will be able to meet the needs to repay the loan.
That's wonderful information. So you want to have a sense after reading the business plan that this person is ready to succeed with that business. Great.
Correct. Basically, we want to make sure that they are well versed. They've done the research into their industry. They know exactly what they need to start and scale.
Okay. So what characteristics do you look for in a borrower?
Well, typically I look for industry experience. Sometimes it might be hard for a bricklayer to become a sewer or a seamstress or a seamster. I don't know the correct terminology. But at the same time, have they invested their own capital into the project? Are they up and operational at this point? And now they're getting to the seed money phase of reaching out to a bank to grow the business to the next phase.
So someone who has already invested time, energy, money into
And knowledge.
into the endeavor,
Yeah.
Yes.
not just coming in the door with nothing really planned or to offer.
Yeah, some form of background.
Okay. What are some of the common mistakes you see from loan applicants?
A lot of businesses come in and will just ask about, they would like to get a loan for as much as they can get. And that is absolutely not what a bank wants to hear. You need to have that in your business plan on how you came up with a specific dollar amount and why you need that dollar amount. What is the loan breakdown? How do you plan on repaying it? And sometimes you don't want to start off too big. Maybe you need to rent instead of buy or things like that.
I think that would be a problem for me. I would be grand scheme, all these wonderful plans, and no idea of how to get there. So,
All right, I agree that the biggest mistake is coming in without any knowledge of what it would take to the first investment and then the second round of funds that you would need, or the third, they seem to not know how to grow and scale their business. So I would say, really do a market analysis. Really look into, is that business even needed in that specific area and things of that nature, and really know exactly what's needed to grow it.
I would think that there are a lot of people out there that want to start a business that don't even think about the fact that they might need a second loan, third loan, and so forth.
Yes.
Interesting. So demonstrating the financial picture and value of the business is something that people may not fully understand. You might think, well, I don't have an accounting degree, I don't have a finance degree, and so those concepts can be difficult. What financial information do you need them to include in the business plan?
Well, I know you talked about it, but basic accounting, understanding the balance sheet, the income statement, working capital, what have they injected in, what access do they have for outside capital to inject into the company, projections along those lines as well as depending on the type of industry that they get into, specifically more a commercial industrial, there's a lag between when they do the work and complete it versus when they get paid. So understanding that cash flow cycle is paramount in success, depending on the type of industry you get in. If you're a baker, you get flour, you bake it, and you sell it pretty much the next day, 2 days. If you're an industrial customer out at the mill, it may be several weeks to several months before you get paid, and along those lines, you've got payroll, fringes, and insurance to take care of. So understanding that financial aspect of the picture, the cash flow cycle and basic accounting principles, or you don't have to know accounting, but understanding the balance sheet and income statement is pretty significant when we look at business plans.
And that's where having some experience under their belt in running that business is going to help them.
And just even for beginners, there are applications they can purchase that would help them learn how to navigate those different financial projections.
Tom?
And at least from our standpoint, we require projections, especially for new businesses. If you've been in business less than a couple of years, we're going to want to see at least 2 years of projections. In addition to income and a breakdown of expenses, we will probably want a narrative as to how you're coming up with these numbers. Don't just plug in a number, explain to us how you're going to get to that level of income or amount of expenses.
Okay. It's interesting that, Dan, you talked about industry. I had some experience with a manufacturing company as a consultant, and we did the work, billed at the end of the month for that work, and then they were on a 60-day pay cycle. So we were doing work and not getting paid for 3 months.
Yeah.
So what advice do you have for someone who wants to pursue a loan from your bank?
Well, the first thing that I would like to see is a small proposal. It makes it so that we see if we have an interest in what it is that you are trying to get funding for, if we have a program or a loan program, I should say, for what it is that you're trying to get funding for. So first, a 3 to 5 page proposal, and then if there is an interest, we would like to see their full business plan.
Yeah, and depending on the size of the loan, at least with us, a 3 or 5 page plan could be all we need. But if you're looking for a loan of several $100,000, it's going to be a lot more involved. So plan on spending a lot more time on things.
I would agree for the most part. I've also worked in other institutions where they would want a full financial picture besides just the initial conversation of a 3 or 5 page. So it really depends on the institution that they approach, whether it's one that they currently bank with or others that they reach out to. Some require 2-3 years worth of personal information, personal financial statements, and other things along with that introductory or the synopsis of the initial business plan. So it's really, I hate to say, it's kind of across the board, I don't want to say hit or miss, but each institution is going to have a little bit of a different set criteria as they move along.
So every bank has their, I don't want to say pet projects, but their types of businesses that they tend towards to fund and so forth.
Right,
So
yes.
if you get a loan or you get denied at one bank, it's wise to approach another bank.
Right, or even make phone calls to see who offers the type of program you're looking to get funded.
Because every bank has different levels of, how conservative they may be. And so it's not anything against the applicant, it's just maybe that bank is not the bank for them. Maybe they need to look elsewhere.
I would agree. I think the risk tolerances at various banks for various industries differ. And certain advance rates for those loans could differ at various banks. Some may be at an 80%, some may be at a 75% loan to value. So it would always help an applicant to shoot a large array of your arrows across all targets to see who can compete for your business as well as who will give you a better deal.
Exactly.
Yep.
So when we think of lenders, I think most people would probably think of a bank, but there are other types of lenders as well. Could you share some of those thoughts on where else someone might be able to go for a loan?
Well, for Horizon Bank, we are dealing with CDFIs and community development financial institutions. If the prospect of a loan and they come in and we don't have a loan that meets their credit criteria, maybe their credit score is a little too low or their financials are not there for us, we will refer them over to our partnering CDFIs who really deal with building and helping them learn exactly what they need to build that profile to then come back to our bank.
Okay.
We work with, and it sounds like a similar project. We work with Axion out of Chicago, but I also believe they do make calls in Northwest Indiana, and they're a micro lender, so they will go up to $50,000, I believe, and it's loans that may not quite be ready to talk to a bank, but they help them get on the right track, so a few years down the road, they would be a bankable credit.
So they'd be able to come in with that history of having had loans and paid
Yeah,
those.
exactly.
Very good. We talked a little bit about the documentation that should be submitted with the loan application, the business plan, some 2 to 3 years of personal taxes, projections you mentioned. Are there any other documents that come to mind that should be included in the loan application?
I think if the applicant is looking for investment property, and for us that is typically 5 units or above, we would like to see copies of leases or rent roll. We would like to see sellers Schedule E's from their tax returns so that we know what the income and expenses have been on the property. We also have a debt schedule form that is filled out so we know exactly what is being paid by the existing business on business debt. So we require all of that.
Any other
I would
thoughts?
also, I'm sorry, I don't mean to interrupt you. I would also agree and build on from the standpoint, assuming this is a startup entity, a business plan. We've talked about the business plan, the projections, the statement of cash flows, the individual support. And one item that we haven't brought up yet was the bootstrap capital, which is a lot of times people may not have money to inject in the company, but if they have a significant individual in their family that is working, a spouse, they could live off of that income. Well, this person is basically starting his company or her company from scratch. So understanding and having the financial support from the individuals, that could also be added or helped with the projections or added to a business plan to help a bank understand we all need to survive, right? We all need to live, roof, water, or food and water and shelter. So at the end of the day, having that complete picture would be pretty helpful in a business plan.
So this is a lot of information, obviously, for someone who might be brand new to thinking about starting a business. Where can they go for help on writing their business plan, besides, of course, the IU Northwest Small Business Academy?
I was going to say that, so you kind of took my thunder there.
Exactly. I believe the Indiana Small Business Administration, they have wonderful programs there. Also SCORE. SCORE is with the SBA. They will walk you through step-by-step understanding even each section of your business plan. They will even help you understand your projections and pull together your mission statement. So SCORE is where a lot of people could start if they have no background at writing a business plan.
We refer a lot of people to the Small Business Development Center. It's in the Ameriplex complex on Broadway, right on the Maryville Crown Point line. And they will help with the business plan, they will help with projections, and it's totally free. So, as is SCORE. So, it's a good opportunity for people.
So I think another question people might have is, how does this whole process work? So can we give our viewers a sense of the kind of the big picture of the loan process from start to finish?
Well, I'll speak in generalities because each institution, just as I said earlier, have a certain risk tolerance. Each institution, although banking's pretty simple, we take deposits and we lend it out. I mean, that's banking in a nutshell for the most part. One at a lower interest rate, one at a higher interest rate. So the loan process will typically be the same at each location, 3 or 4 major points. Meeting with a loan officer, discussing the program. Collection of financials and submitting them to a loan underwriter after maybe the loan officers reviewed them, and then they submit to the underwriting department where further criteria and evaluation is done. Then there could be an approval process either through the lender itself, a manager, or head of lending department, and then you work through the doc process. So that is a very giant 30,000 foot overview. At least from my experience, that's how it's typically worked. And I could be wrong.
I agree.
Tell me your trade secrets, guys.
It sounds exactly like the process that we take at Horizon Bank as well.
And underwriting is probably, I'm imagining that's the longest part of the process. They might be coming back and asking for more information and working through all of the information that we've been talking about this whole time. That's
Yeah,
takes some time.
we have basically the same process. We'll send out a checklist of all the information we need for that specific request. And sometimes, though, the biggest issue is getting the loan closed because people don't understand sometimes all of the information that is needed to get from an approval to an actual loan closing. So if there's real estate involved, we need appraisals, title work, possibly a survey, proof of insurance, operating, all entity documents. So that sometimes takes a little while too. But at least then, though, they know there's a commitment for an approval. So that helps a lot.
Are you able to say a ballpark time it would take, or does it vary too much depending on the loan?
It varies, due to the necessary documents that's needed and everyone taking their time to grab a hold of their financials or making sure their proposals and their business plan is, well versed in what we needed to convey to us. And again, all the documents from all the other third parties, things can vary for us.
Yeah, that's the way it is for us too. If a real estate loan is involved, it takes a lot longer. So, it could be, once the commitment letter is sent out, it could be 60 days to get
Yes.
a commercial appraisal and title work and everything.
Mm-hmm.
If it's just business assets that's taken as collateral, then it's shorter than that.
But it could also mean too, with the business assets, if you need an equipment appraisal. We used to require those, a lot of banks required those a lot. And there were equipment appraisers in the area, at least in Northwest Indiana. It's kind of dried up, hasn't it? Would you agree?
Yeah, I agree.
And then last year during COVID, you probably could have gotten an appraisal on a piece of property within 2-3 weeks. They're quoting as of, what is this, May,
May 20th.
and we won't say what year so we could dub it later, but May, as of this month, I'm getting some cases 6 weeks, and I know it's going to run 8.
Yep.
Yes.
Yep, I agree.
So,
Yeah.
yes.
So people have to be patient.
Yes.
Good to know.
Yes.
What are the common terms of a commercial loan contract, and how do they differ from mortgages and other loans like car loans that people might be more familiar with?
Well, I mean, for us, if it's an equipment loan, for a piece of equipment, we can typically go 80% of the purchase price or loan to value, whichever is less. And depending on the type of equipment, it's usually a 5-year term. If it's a real estate loan, we can look at a 20-year term with 5-year rate adjustments. So I guess each type of loan will determine how it's being priced and the maturity and amortization on it.
I would agree with that as well. I know on the commercial side, typically interest is calculated on 360 days. So when most people are doing their business plan, they look at a mortgage calculator, which is based off of 365. So when they're doing their numbers, they're always off a little bit, and they don't understand why. So typical commercial loans are around 360 days of interest versus 365. And as Tom has said, we typically will tie a piece of equipment to the useful life.
Yeah.
If you want $10,000 worth of computers spread over 10 years, we probably aren't willing to do that because, as we know, the useful life on electronic equipment could be 6 months to a year. So there's some caveats in there, as if they have larger pieces of fixed equipment that have a longer useful life, sure, maybe we could throw a small portion of the computers in. It shocks people sometimes when they're buying a $700,000-$800,000 piece of machinery and you're talking to them for the first time and they realize, oh, you're going to amortize this over 10 years. I mean, that's $70,000 a year without my interest payment. So it can be a wake-up call sometime looking at commercial versus what most people are used to with individual or consumer credit.
Yet Dan's right, and another thing that we always have people asking for are amortization schedules on their loan. And what we try to make everyone understand is if they make a loan payment one day late, even though it's made on a Monday after the payment was due on Sunday, it changes their amortization. It changes it. So if you're getting a 20-year amortization, you can't really follow that to a big degree. It's a good idea, a good calculation. You can kind of get an idea what your loan balance is, but it's not going to be exactly that.
Wow, this was great information. And do you have any final thoughts or things that we didn't cover that you want the viewers to know?
Well, we want you to pursue your dreams. The key is to get started. If you don't have the background, it would be a good idea to try to reach out to those in your industry to get some information. Maybe work with college, soon to be college grads, and get a hold of building a team if you're just starting out, and reaching out to SCORE and the SBA and things of that nature if you're just starting out. And just get started. And a lot of us, some of us, we're here to help you walk through that process.
We are a preferred lender with SBA, and we have no application fees, so it doesn't hurt to talk and fill out the basic paperwork and just see what we might be able to do for you. And, you know, at least, and I'm sure all of us could say this, if we can't do it, we'll be honest with you, and we'll try to point you in the right direction as to how it could be done at some point in the future, or if there's any other place we could suggest to point you in that area.
I would say if you're looking to start your own business, work in that industry, understand the nuances. When you own your business, everyone else gets paid first before you do. Even your employees, the ones that aren't good employees, they still have to get paid before you do. So that's number one. Work in the industry and get some knowledge. Do you want to wake up at 4 o'clock every morning to go punch dough or proof dough for your bakery? Second, understand you're going to have to throw equity into the project or have offsetting collateral in excess of your loan, especially starting out. And then third, take care of your personal credit. As you're starting out, when we look at the business, we have nothing to go off of. We will look at an individual. In this industry, most people will look at the individual, and if they've handled their personal credit, that's pretty much how they're probably going to handle the business credit. It's not cut and dry. It's not saying, well, it's a turn down because of that, but it's a good indication. It tells us that you are responsible to handle operating accounts and other things like that timely. That's what I would advise. And also, go to every bank, talk to someone, and pick their brain. Do it 6 months to a year before you decide to really open up your own place.
Yeah.
Wonderful, wonderful advice. I'm sure that our viewers are probably overwhelmed right now with all of this information. So viewers, don't worry. It's a video. Go back and listen again. Thank you so much for sharing your expertise with us. And we look forward to many activities and interactions with you through the Small Business Academy.
Thank
Hint,
you.
hint, wink, wink. Thank you.
Thank you.
Take care.
Thank you.